The Nightly Business Report.
Good evening. Tonight, according to the preliminary figures from the Sri Lanka Tourism Development Authority, the number of visitors to Sri Lanka jumped past 170,000 in the first 3 weeks of January. In order to handle the anticipated spike in demand and avoid revenue loss from under-invoicing, the government is being pushed to establish a tax system as passenger vehicle imports are scheduled to restart on the 1st of February. The ASPI and the S&P SL20 indices both showed significant gains on the opening trading day of the week, indicating that the market was moving upward. And investors were hopeful about DeepSeek R1, an artificial intelligence model that could have an impact on the tech industry, despite the mixed outcomes in Chinese markets.
From Studio 24, here's Sanuvi Mudanayaka.
Good evening and thank you for joining us. Tourist arrivals to Sri Lanka have surged past 170,000 in the first 3 weeks of January, according to provincial data from the Sri Lanka Tourism Development Authority, signalling a strong start to the year for the country's tourism sector.
Sri Lanka has seen a strong start to 2025 with 177,403 international visitors arriving in the first 22 days of this month, making a 19% increase from the 148,898 arrivals in the same period last year. The daily average stands at 8,063 arrivals, while the weekly average is approximately 59,000. India continues to be the leading source of tourism, contributing 17.4% to the total arrivals. The Russian Federation follows closely, accounting for 14.4% of traffic, while the United Kingdom ranks third with 8.4%. Germany also remains a significant market, contributing 6.6% to Sri Lanka's tourism. Other important source countries include China, Australia, France, the United States, Poland and the Netherlands. The steady rise in arrivals reflects growing global interest in the island nation's tourism offerings. Sri Lanka's tourism industry is poised for further growth, with the increase in arrivals signaling a positive recovery and a renewed interest from key international markets.
As passenger vehicle imports are set to reopen on the 1st of February, the government is urged to implement a tax system to manage the expected surge in demand and prevent revenue loss from under-invoicing.
Advocate Institute Chairman Murtaza Jafarji has proposed a phased surcharge tax on vehicle imports to manage the expected surge in demand, urging the government to implement the policy over a 6 to 12-month period. Speaking at a discussion organized by HNB Leasing in Colombo, Jafarji recommended the individuals eager to purchase cars quickly should pay a higher tax. He emphasized the importance of announcing the tax policy in advance and ensuring the government commitment to it. Ceylon Motor Traders Association past President Sharak Pereira also supported the proposal. Senior economic advisor to the President, Dumendra Hulangamo, revealed that the main goal of reopening vehicle imports is to generate 300 billion rupees in revenue. Jafarji further highlighted that while property taxes could be more equitable, vehicles on offer simple route for taxation. However, he criticized the current unit-based duty system, calling it flawed and distorting the market, particularly with the rise of electric cars.
Sri Lanka achieved a record export revenue of $16.17 billion in 2024, according to the Sri Lanka Export Development Board. This marks the highest export earnings in the country's history, surpassing the previous record of $15.72 billion set in 2018. Of the total, $12.70 billion came from merchandise exports, while $3.46 billion was generated from service exports. Provincial data from Sri Lanka Customs reveals that merchandise exports for December 2024 totaled $1,042.5 million, a 4.06% increase from December 2023. Key sectors driving this growth include apparel and textiles, tea, rubber-based products, coconut-based products, spices and concentrates, and foods and beverages. Services exports for December 2024 rose sharply by 29.96%, reaching $322.92 million overall. Total exports for December 2024 amounted to $1,365.42 million, reflecting a 9.21% year-on-year growth. Deputy Minister of Food Security R.M. Jayawardena has announced that a final decision on importing coconuts to meet the demand of factories producing coconut-based products will be made by the first week of February.
Coconut prices in Sri Lanka have surged significantly, with retail prices in key markets like Peta and Narahenpita rising by 66.7% from 120 rupees in January last year to 200 this month. Wholesale prices have seen an even sharper increase, jumping 111.1% in Peta from 90 rupees in last year to 190 rupees in this year. The Central Bank of Sri Lanka attributed the price spike to limited supply for major coconut producing regions. In response, Deputy Minister of Food Security R.M. Jayawardena revealed that cabinet discussions are ongoing, with a final discussion on coconut imports and quantities expected by the first week of next month. He also clarified that coconuts for state-owned plantations would be reserved for consumer use through the state-run Satosa network. Coconut production has been steadily declining, with a 24% drop reported in October last year, and the Coconut Research Institute forecast a further decline this year. Experts blame inadequate fertilization over the past 5 years, linked to rising fertilizer prices and import controls. Experts blame inadequate fertilization over the past 5 years, linked to rising fertilizer prices and import controls.
Minister of Transport, Highways, Ports and Civil Aviation, Bimal Ratnayaka, has confirmed that the government is taking steps to ensure the continued operation of Sri Lankan Airlines as a state-owned entity. This comes despite the significant debt the national carrier has accumulated over the years. Ratnayaka criticised the previous government's plan to privatize the airline, which had been categorized as a loss-making state-owned enterprise. He also pointed out the mismanagement under the prior administration, including the grounding of 3 aircrafts for 3 years without engines, costing the government $9 million per month. Ratnayaka emphasized that under the current leadership, efforts are being made to secure necessary funds, with one of the grounded aircrafts already back in operation. The minister assured that the remaining 2 aircrafts would be operational by April. He further stated that the government intends to move forward with the airline without selling it. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The market saw upward momentum on the first trading day of the week, with both the ASPI and the S&P SL20 indices reflecting notable increases. Investor sentiment remains positive as the market continues to gain traction. For further insights, we speak with Akna Tennakon from First Capital Holdings.
Thank you. The Colombo Stock Exchange experienced a day of positive sentiment and low market activity, in contrast to the volatility observed earlier in the day. The ASPI closed the day in green at 17,045, gaining 127 points, marking a 0.75% increase from the previous day. Investor activity was subdued, with a noticeable shift away from the earlier market volatility. Most of the investors' attention was focused on blue-chip stocks, signaling a preference for well-established companies amidst the market's quieter atmosphere. The lack of crossings in today's session pointed to decreased participation from both retail and high net worth investors. Among the key contributors to the positive movement in the index were Melstar Corp, Lanka IOC, Bukit Dara, H&B and Carson Cumberbatch, which helped propel the index to close on a high note. This absence of large-scale transactions further contributed to the lower overall market activity. Despite this, turnover stood at 5.9 million rupees, showing a decline of 19.5% from the monthly average. Sector-wise, the capital goods sector led the turnover, contributing 24%, followed by the banking and energy sectors, which jointly accounted for 32% of the overall turnover. These sectors dominated the day's transactions, indicating investor interest in both infrastructure-related stocks and stable banking and energy companies. Thank you.
The market is expected to build on last week's strong performance, with the ASPI surpassing the 17,000 mark. However, while there was upward momentum on the first trading day of the week, the market's direction for the rest of the week remains uncertain. For further insights, we speak with Dimantha Matthews from First Capital Holdings.
So the market started off on a positive note this week, with the market crossing the 17,000 mark. There seems to be a bit of a slowness in the market, and we think that could go ahead into this week as well. Mainly because with the month end approaching, there could be some amount of selling pressure in the market, and in addition to that, there could be a bit of profit taking in the market as well. However, with the results coming in, most of the results seem to be quite positive, and with that we believe that there could be a lot of buying interest coming into the market as well. So we are not expecting any sort of negativity in the market or a downtrend in the market. We think the selling pressure or the profit taking is likely to get absorbed, and with it there could be a positive uptrend in the market. Overall, turnover levels are likely to be stagnant, however, with the selling pressure that is there. However, as the weeks progress with the low interest rate environment, we think retail and high net worth interest will gradually build on as the weeks progresses.
Gold prices dipped today as a stronger dollar weighed on the metal, with investors closely watching the Federal Reserve's upcoming meetings for clues on US interest rates. Spot gold fell 0.6% to $2,755.80 per ounce after approaching record highs last week. US gold futures also dropped 0.7% to $2,760.70. IG market strategist Yip Yun wrote attributed gold's weakness to the firmer US dollar, but noted that the downside for gold remains limited, potentially supported by safe haven flows. Meanwhile, concerns over a potential trade war between the US and Colombia eased, as the two countries agreed to military aircraft carrying deport migrants. The focus now shifts to the Federal Reserve's first meeting of 2025, which could provide guidance on future interest rate decisions. Market participants are anticipating signals that could affect the US dollar and gold appeal. Oil prices slipped today after US President Trump urged OPEC to reduce prices following his announcement of measures to boost US oil and gas output. Brent crude futures fell 0.68% to $77.97 a barrel after settling up 21 cents last week. US West Texas Intermediate crude dropped 0.67% to $74.16 a barrel. Trump reiterated his call for an OPEC to lower prices to weaken oil-rich Russia's finances and help end the war in Ukraine. He claimed that reducing oil prices could quickly stop the war. Trump also warned that Russia and other participating countries could face taxes, tariffs and sanctions if a deal to end the war is not reached soon. The comments added further pressure on global oil markets. The Sri Lankan rupee has strengthened against the US dollar in commercial banks today, showing a notable appreciation compared to last week. According to the commercial bank, the buying rate for the US dollar has decreased while the selling rate has also adjusted. Let's now take a look at how the Sri Lankan rupee is performing against other major global currencies. A short break now. This is the Nightly Business Report. Welcome back. Sri Lanka's automotive sector has flourished despite vehicle import restrictions, fueled by the Local Value Addition program. The initiative has sparked innovation, created jobs, and strengthened local vehicle component manufacturing, particularly in the assembly of Bajaj motorcycles.
The Local Value Addition program has led to the establishment of a sustainable vehicle component manufacturing industry in Sri Lanka, turning a necessity into a thriving sector. Initially driven by import restrictions, the program has strengthened the local automotive industry, reduced import dependency, and contributed to the economic growth. It has also set a precedent for other industries to adopt local manufacturing models, promoting sustainable growth in Sri Lanka's industrial landscape. The success of DPMC Lanka's Bajaj motorcycle assembly under the LVA program highlights the country's resilience and adaptability in the automotive sector. By focusing on innovation and quality, the program has positioned Sri Lanka as a competitive player in the global market. Furthermore, it has created job opportunities and introduced international technology, paving the way for long-term growth. DPMC Lanka's efforts are shaping the future of Sri Lanka's automotive industry, creating a self-sustaining manufacturing base that meets both local and global demands.
Dinesh Veerakodi, a top professional, has been appointed to the board of Ceylon Hotels Corporation PLC as an independent non-executive director. Veerakodi is the former chairman of Hatton National Bank PLC and Commercial Bank of Ceylon PLC and a former director of DFCC Bank. He has also held several key leadership positions in the public sector. Currently, he serves as a chairman of Union Bank of Colombo and the Employers Federation of Ceylon. Additionally, he is the immediate past chair of the International Chamber of Commerce Sri Lanka and the senior vice chairman of the Sri Lanka Institute of Directors. Veerakodi is also director at several leading companies. Ceylon Hotels Corporation, which manages a unique collection of properties, is known for its presence in historic and popular tourist destinations across Sri Lanka. NDB Bank launched TradeLink, a new in-house platform for supply chain finance, offering tailored solutions to Sri Lankan corporates, SMEs and partners while advancing the nation's digital transformation.
NDB Bank has launched TradeLink, an in-house developed supply chain finance platform designed to address the unique challenges faced by Sri Lankan businesses. Unlike international platforms, TradeLink offers a cost-efficient and flexible solution, providing real-time funding and improving liquidity management for corporates and SMEs. The fully digital 24/7 platform has already earned national recognition, winning an award at the National Best Quality Software Awards. By enhancing supply chain visibility and fostering collaboration among partners, TradeLink ensures transparency and trust while empowering businesses to seize growth opportunities. The platform aligns with NDB Bank's vision to strengthen corporate and SME growth, simplifying financial processes and streamlining operations. It further solidifies NDB Bank's role as a key enabler of Sri Lanka's digital economy, driving innovation in the financial landscape. Through TradeLink, NDB Bank is helping to shape a sustainable future for Sri Lanka's businesses, leading the way in digital banking solutions.
Mullenlove Group Sri Lanka has appointed Nishant Mehta as Vice President and Chief Strategy Officer. This appointment is part of the group's strategy to enhance its strategic capabilities by bringing in a senior brand strategist. Mehta's extensive experience across key markets such as India, China, Dubai and Malaysia aligns with MLG's diverse brand portfolio. He has worked on leading brands in various sectors including personal care, food and beverage, automotive and finance, with notable clients such as Unilever, IKEA and Nissan. Mehta has held senior roles at global agency networks like FCB, Leo Burnett and Grey, and most recently served as Head of Strategy at Mindshare. He holds a master's degree in mass communications and is fluent in English, Hindi and Mandarin. His appointment will further strengthen MLG's strategic offering and bolster its brand expertise in Sri Lanka. AIA Insurance has renewed its partnership with Sri Lanka Cancer Society for the 6th consecutive year, reaffirming its commitment to supporting cancer awareness, treatment and prevention throughout the country.
AIA Insurance has renewed its partnership with the Sri Lanka Cancer Society for the 6th consecutive year, continuing its pledge to support cancer awareness, treatment and prevention. As part of the initiative, AIA has committed to contributing 100 rupees for every new policy sold since 2019, reinforcing its long-standing dedication to improving public health. The renewal of the partnership was formalized with the signing of the Memorandum of Understanding by AIA's CEO Chathuri Munavira and Cancer Society Chairperson Anoja Karunaratne. AIA's contributions have significantly improved Cancer Society's initiatives, particularly funding care facilities like the Bandaranaike Memorial Homes for underprivileged cancer patients. The insurance company has also directed funds toward cancer awareness campaigns, focusing on breast cancer prevention and early detection. In 2024, AIA launched successful breast cancer awareness campaigns, reaching thousands of Sri Lankans and empowering employees and wealth planners to promote early detection. These initiatives have fostered an open dialogue about breast cancer, providing essential resources and support for those affected.
Let's take a short commercial break. Global business updates coming on the other side. This is a nightly business report. Welcome back to the Nightly Business Report. Most Asian stocks declined today following US President Donald Trump's imposition of trade tariffs in Colombia, which heightened concerns over further trade disruptions. Chinese markets saw mixed results, with investors optimistic about DeepSeek R1, an artificial intelligence model that could impact the tech sector. Hong Kong's Hang Seng Index bucked the trend, rising 0.6% due to gains in major internet stocks. Japan's Nikkei 225 dropped 0.4%, while the Topix Index gained 0.5%. Singapore's Straits Times Index fell 0.3%, and South Korea's Kospi remained flat. Futures for India's Nifty 50 Index suggested a weak opening, with key events such as major earnings and the union budget expected this week. Australian markets were closed for a holiday. Boeing warned that it expected a fourth quarter loss of about $4 billion to close the year, marred by production quality crisis, stricter regulation scrutiny, supply chain delays, and a crippling strike US West Coast factory workers.
Boeing warned Thursday that it expects a fourth quarter loss of about $4 billion. That would be nearly triple Wall Street forecasts. The glum outlook sent shares in the aerospace giant tumbling, down 3.5% in after-hours trade. Such a loss would cap an awful year for Boeing. Early in 2024, a mid-air blowout on one of its 737 MAX jets revived concerns over the firm's manufacturing quality. Regulators subsequently capped output of the planes, which are Boeing's best-selling product. Later in the year, the company faced a crippling strike by West Coast factory workers. That halted production of several models. The company has also faced deep problems in its defence and space businesses. That includes persistent and high-profile problems with its Starliner space capsule. All told, that saw Boeing rack up nearly $8 billion in losses over the first 9 months of 2024. On Thursday, Chief Executive Kelly Ortberg said the firm faced near-term challenges, but had taken big steps towards stability. Besides ending the strike, he cited moves to raise more than $20 billion in new capital. But Thursday's outlook suggests Boeing could post a full-year loss to rival a record set in 2020, when its deficit hit almost $12 billion.
Puma shares slid 18% after the German sportswear brand reported lower than expected fourth quarter sales and a decline in annual profit. The company has legwork ahead to boost its brand and take a bigger slice of the $400 billion global sportswear market.
Puma shares slid 18% on Thursday. The German sportswear brand reported lower than expected fourth quarter sales and a decline in annual profit. It raises questions about its ability to compete against bigger rivals Adidas and Nike. The weak results late on Wednesday came after Adidas reported strong sales and profitability. Puma has legwork ahead in order to boost its brand and take a bigger slice of the $400 billion global sportswear market. The company has been trying to launch new trends, such as the motor racing-inspired Speedcat, But JP Morgan analysts said sales trends for the Speedcat have been weaker than expected. The market also remains dominated by Adidas's retro Samba trainers. New fast-growing brands like On Running and Hoka have also shaken up the sportswear industry. Puma's fourth quarter sales grew 9.8% against the 12% growth expected by analysts. Net profit last year fell to $293 million from $317.5 million. That was in part due to higher interest payments on its debt.
That's all from us on the Nightly Business Report for today. We'll see you again tomorrow with the latest updates in the business globe. Until then, I'm Sunny Mudanayaka. Thank you for watching and have a good night.